Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, February 3rd, 2016. In this video, I wanted to take a look at some potentially bullish setups in the coal sector. I know when I say the word coal stocks or coal sector, a lot of you probably shudder. The coal sector as a whole has been in just a vicious bear market for years now, more so than crude oil. And ultimately, the success or failure of any of these trade setups, at the time they're all just setups, and a trade setup is nothing more than a potential trade that's yet to trigger an entry. So keep that in mind. But the success or failure of these trades will depend largely on what crude oil does. I've made a case recently that the bottom may be in crude. Longer-term charts have been showing a lot of potential bullish developments as far as divergences and things, but we haven't seen any evidence of a bottom. And the recent rally that we had in crude, which obviously benefited coal stocks will trade largely in line with crude oil because it is an alternative energy source. So cheaper crude equals cheaper coal. Crude prices go high, coal prices will rise. So that rally that we've had in the last few weeks in crude also translated to a rally in these coal stocks, but there's still some nice setups. So should crude oil move higher in the coming weeks to months, we could see some of these break out. And although this sector has been just absolutely toxic for years now, there have been some great opportunities. Even the bear market rallies, we've traded some of these, and the moves are tremendous. Now you have to, again, keep in mind these are counter trend trades. It's a bear market these stocks are in. If you do decide to take these, also keep in mind that this is an extremely volatile sector, especially these individual names. It's like trading the mining stocks. It's not unusual to see moves of 5, 10, in some of these stocks 20, 30% a day. So if you don't keep that in mind and adjust your position size accordingly, meaning smaller position sizes to account for above average loss potential and the above average gain potential, then you will, sooner or later, you'll get burned trying to trade this sector. So again, that's something to keep in mind here. All right, CNX, let's start out. Let's actually do this in order of market cap. I have a watch list. You can't see it. It's off the screen. I'll be going through. It is not completely comprehensive of all the coal stocks out there. It's just some that I've watched and traded over the years. Starting with YZC, Yangzhou Coal Mining Company, a Chinese coal stock. This is about a $2 billion market cap I'm showing from my stats on this one. And what we see here is a divergent low, what I like to call potential divergence, because I want to see this MACD curl up. As long as the MACD is headed down, and we haven't seen a solid bullish crossover in the MACD, it could go lower, and I could easily see another thrust down on YZC. Maybe not. An aggressive trader might want to start scaling in here with stops not too far below the lows. Let me draw out what I can see happening. Hold on once. Okay, just eyeballing the chart. I could easily see another move down to, lost my screen draw tool. Here we go. Another move down, maybe another tag of this trend line, as long as this divergence stays intact, and then a move up. Now, we do have resistance. The first resistance would be actually right about here, on top of these recent reaction highs. That would be your first resistance level. But this is what I would call key resistance. We have numerous reactions here, 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 and then a downtrend line not too far above that. So if the energy sector and the coal stocks move up and then in the coming weeks, you might have some resistance here. Probably get a reaction on the first tag of that trend line, and it may take, if we go a little lower, these trend lines may come in together. It could be a couple more months before the coal's bottom, and if so, that resistance, the downtrend line and horizontal resistance, would come in around the same time. And then if and when we got above that level, that would be your, I don't want to call it all clear. Oops, wrong tool. But this is where your target would be. We have numerous reactions here from above, a reaction from underneath, and so that one looks like it has the potential. And again, from current levels, And I don't see the most objective entry right here at this time, but just to kind of measure this out to quantify the move in these stocks, that would be about a 40% gain. And let's just look real quickly at where the stock has come from. Like so many others, here's the highs back in 2011. I'm just going to use the measuring tool to roughly grab the highs. So that's about over 90% drop, a 91% drop in this stock. Now what I like about this, again, potentially, not yet, we're not there yet, is the potential for a bear trap. You see the lows back in 2008 we had during the financial meltdown. We had several tags of this level here around the $4 level, this horizontal line that I'm highlighting, and most recently we've fallen below that. So that is, by most accounts, a bearish technical event. The stock is at new lows, broke that long-term support. However, if we can manage to come back above the $4 level, especially print a weekly close above that level, we would also take out this downtrend line here, and that would be bullish and probably propel that stock. Again, looking at a weekly time frame, it may take a while to get there. Although these things can run quick, they can sometimes, especially if they're extremely oversold, they can move up as fast as they've fallen, and that would take you up to about almost a 550 area, give or take. And over time, there's more potential. This is a very solid level. If and when it got up to that level, that's 670. And again, if there is a bottom in the energy sector within the next year or so, which is very likely, you're looking at a 72% gain. So these are tremendous amount of potential. Again, the entries, I just don't see them. We're very close, and that's why I wanted to do the video here. Here's CNX, number 2. This is an American company. CONSOL Energy. They do coal as well as natural gas and crude. So it's in my coal watch list. And beautiful chart, really. You see a horizontal resistance level around 878. We'll call it 880 to be safe. Very well defined. We have a reaction low, a gap, reactions from below several times, trying to break through that level. We have a pretty well defined downtrend line. And what happened here on this one, let's just zoom in for a second. We had a bull trap, a false breakout right here at this point. Now, what happened is you probably had a lot of traders watching this downtrend line, but they weren't paying attention to the horizontal resistance, including that nice gap. I love it when you see you can trade around gaps, especially when you have numerous reactions. So, as with most bull traps, once that failed and prices moved back below that downtrend line, you can see the downside move was very impulsive, and that is typical, and that's why I love trading bull and bear traps. You have to wait till they happen. Once in a blue moon, I'll get in front and try to anticipate a bull or bear trap. In other words, take it while that bear trap is in play. But yeah, I wasn't in CNX at this time, and at this point we're just above that key resistance level. So that, again, what I call it, 880 or so. So solid break and close. Now that's another thing I wanted to mention. I often talk about when trading the charts, I like to at times wait for a candlestick close that is commensurate with the time period you're trading. In other words, this is a daily chart, so what you want to see is a daily close. If you don't, let's see what happened here. You can probably just make this out. There's 2 candlesticks right here where you had intraday breaks, and that's evidenced by the candlestick wicks, these shadows up top, and both of those candlesticks closed back below the trend line. The resistance level, I should say. There's a third right there. So this is a great example of why you might want to wait for a daily close when trading a breakout on a daily time frame, and that is to help avoid these whipsaw signals. So there's 3 of them right there, and you can see after those first 2, the move down was pretty violent. So whoever took that breakout, figuring, okay, we took out that gap resistance, that's bullish. Well, you should have waited. And you should have also been cognizant that there was a pretty well-defined downtrend line just overhead. So it probably wasn't coincidence that that first breakout failed exactly on that downtrend line. And since then, we had that break of this key support level here around 630. Sharp move lower, but look at this nice divergent low. Strong bullish divergences Very strong move. Again, a lot of this was in sympathy with crude oil, but the charts are what they are. So this is really supply and dynamics in the market. These are extremely oversold stocks, and I'm going through these in order of market capitalization because the larger the company, typically it's a general rule, but the safer it is to invest. When we get down to these very small coal companies, there'll probably be more bankruptcies. There's already been quite a few bankruptcies in the sector, so you keep that in mind when you're trading a company with a market cap of maybe 100 million, couple hundred million. They may go bye-bye before all this bear market and energy is said and done. There's a lot of these companies, particularly in the coal sector, in very precarious fundamental positions right now. So that's CNX over 780, looks good. Again, this would be taken assuming that the daily charts, the intraday charts confirm. Keep an eye on coal, or crude oil, I should say. And at this point, I'm just going through these as unofficial trade ideas because there's a little work to be done, but I wanted to get these out there for those interested. Okay, let's move on to the next one, AHGP. Move a little faster on these because the story will be the same on a lot. I'm looking at bullish divergences, divergent lows, strong move so far off the bottom, but most of these, as I've said, that initial run, I was watching them, wasn't able to position quick enough to get these out, so I'm just now watching for the next objective entry. And in this case, we have a pretty well-defined downtrend line here. We have some horizontal resistance, which would be defined by the reaction on that downtrend line, and there's another couple reactions back here. Hard to see on this chart. You can see right there. So this is what I refer to as a resistance zone, because there is a little bit of resistance overhead around 1880. So if and when we punch above this downtrend line in that 1803 level, you have a little more resistance above around 1880. So the safer play may be a partial position on a breakout and or close above that downtrend line and the lower line, 1803. Not bringing that to a full position until we clear 1880. If that's the case, then we're looking at a move most likely up to the bottom of this next resistance zone, and that's a good 15% or so run from the top, even the top at the 1880 level. And then we have the top of that resistance zone comes in at 2319, and then ultimately, if the sector continues to firm up, there's a nice gap here to be filled, as well as some reactions there, so I would put a target right around the 2770 level. And again, a lot of work to be done to firm these charts up, but the potential is there, and that's why I wanted to get these out now. ALRP, nice, well-defined horizontal resistance level, as well as downtrend line resistance that comes in. So just like the last stock we looked at. So the setup is there. Work to be done. Again, there's not, at this point in time, to take any of these here would be contrary to trading. You're taking a stock just above, just at that, has just rolled off in this case. By the time I started this video, it's down sharply. It was, before the market opened today, it was trading just right at that level. So you need to see a breakout above that level. And once we take that out, and stock, if it can move up here, and it may take a while, we might have to come back down. Who knows? We can make another low in these stocks. I can easily see, this divergence going on for a couple months. As long as if the stock were to make a new low, the MACD puts in higher highs, the RSI puts in higher highs, which may happen back here at this point, that setup would still be intact. And at that point, the downtrend line would come in with this horizontal resistance level. Okay, let me draw that out. Okay, so that would look something like this. If we made a new low, go down there, MACD makes a new low, RSI makes a new low, higher lows, and then everything reverses. And now this support level that I have here becomes resistance, and so this would be your breakout, to see a break above the horizontal resistance level at the time and that downtrend line, and their first target would be up there to the current resistance level we just failed at. Now that may not look like much, but if we try to quantify it, just using the measuring tool. If you look up to the left, that's a 19% gain. And then if the stock takes that level out and continues higher to my next target area, you're talking 63%. So the risk is certainly in these stocks, but so is the reward, or I wouldn't be talking about them. And again, the way to trade that with these volatile, high loss potential, high gain potential stocks is to adjust your position size accordingly. Take a considerably smaller than usual position size. There's Joy Global, very nice bullish divergence setting up in place. We had bullish divergence back here, and you might say, well, that's one that didn't play out. It actually did. If you really, and this is the thing about using these, I'm using a log scaling on the chart. So if we measure this move where that divergent low was put in at this point, this is where the prices made a lower low against the MACD and RSI making a, higher low. That's a 16.5% gain from trough to peak. So again, you zoom out, it doesn't look like anything on this chart because I'm using a log scaling. But the moves in these stocks, the potential is enormous, especially once the bottom comes. So there's a 30% gain if it runs up just from this, takes out this level and runs up to my next target. That's a 30% gain, and it could go on from there. So Joy Global is another one that looks nice. Again, a little work to be done because you have to take out this intersecting resistance. SXC, SunCoke Energy, very sharp divergent low, very nice defined resistance level where we've had a couple reactions. So, as of this time, we have to take out, that's we'll call it the $4 level. And then we have a target up here. First target would be about 460. And then we have horizontal resistance of 535, which also would come in around this downtrend line. Now, again, if this one takes another low, let's just look at one possible scenario. Let's draw this out. Just eyeballing this, I can easily see a potential inverse head and shoulders pattern. So what you do is you put in we already have a left shoulder here, a head right here. And if the stock takes another dip down and roughly in line with this left shoulder, then you have a right shoulder. So that would complete our inverse head and shoulders bottoming pattern. This horizontal line here would be your neckline. So that would be, you'd wait for a breakout above that neckline, and that pattern would measure, if you take a measurement tool, let's just take that arrow tool. A head and shoulders pattern, if you take the distance from the head to the neckline and you duplicate that, add it to where it breaks out, that's your price target. So, a lot of room, and there's also a reaction right around that level. So over time, and again, the bottom's not there yet. We don't have really any evidence of a bottom yet, but if we do, we're talking a move all the way up to, about the 770 level over time. And the stock's trading at 325 right now. So, if we're to get there, that's well over 100% gain. NRP, this one's interesting. I know there's a lot on this chart. What I did here is I just measured out. It looks like NRP, it took out this downtrend line here recently. Let's try to move in the scaling here. Oops. Okay, NRP looks like a bull flag right here. It took out this downtrend line, right, the first white downtrend line, and it looks to be setting up in a bullish pennant. And if that's the case, I'm not sure it is at this point. With the markets already trading down today sharply, it's probably going to drag crude down with it, but we'll see. If that does happen now, pattern's a pattern. If you want to trade it, you wait for an upside break, and that would be your projected move all the way up to the 274 level. Although in this case, I mentioned the other day, when trading these flag patterns, I'll take a look at the projected move, but you see this line here. This is a very well-defined resistance level. Numerous reactions, that's at 227. So, should NRP break out of that pattern, and if it were a long entry, I wouldn't be holding out for that 272 level. I would be looking to book profits just below that horizontal resistance at 228. There's CLD, just downtrend line and horizontal resistance or target to watch. If we took out that downtrend line, that target's at, call it $2, then above that. And it's pretty well defined. That's a pretty nice target. You would expect a reaction there. if and when it punches through there, 240 would be the next level, and I could probably add some more downtrend lines. But again, as time goes on, if these charts start to firm up or look like they're going to break out, at the very least, I'll post them as unofficial trade ideas in the trading room, and for any standout candidates, that'll make it on the front page. BTU, downtrend line, horizontal resistance around 710, another downtrend line, and then ultimately over time I could see this one going up to the $15 level. Again, that's if it survives this bear market. Now, when I say survives a bear market, and again, I'm going down by market cap here. When you see, these are stocks I've had on my watch list in the coal sector forever. When you see a Q at the end of the symbol, that means that company is in bankruptcy. And nearly all companies, once they enter the bankruptcy proceedings, the shareholder equity is wiped out. And it's amazing that this company still has, and again, I'm not looking at the fundamentals, I'm not digging into the balance sheet, researching this, I don't have time. It's a lot easier to look at the charts, but this company still has a $53 million market cap. Again, it's very likely that once it emerges from bankruptcy courts and all the proceedings are finalized, that the shareholder equity will be wiped out. It's trading at 1.5 cents a share. But with that being said, for some reason, people love trading these stocks, these low-priced penny stocks, and you can get these pops in these stocks. I wouldn't put this one as an official trade idea, but I'll just point it out because there's some levels to watch, and there's a downtrend line that may be taken out. But again, whatever you put into a stock like this, especially one that's already filed for bankruptcy, or you look at a very low price stock, you don't put any more than in that than you can are willing to lose, because you can wake up overnight and this thing could be worthless. There's coal. It's ironic that ANR actually has a larger market cap than the coal ETF, KOL. Now, KOL doesn't have just coal companies. It also has railroad stocks, other companies that derive revenue from the coal industry, not just pure coal producers. But it looks a little interesting here. There's a support a resistance right around $5.94. Call it $6. We have this bullish falling wedge pattern, nice divergences in place, and so there's some potential there for coal if it takes out that $6 level. I really have it right at $5.94. Call it maybe $5.95 or $6 to be safe. It's probably going up to around $6.61. And again, it may not look like much, but if you take the measuring tool, that's a 11% gain. Call it 10% gain if you waited for a $6 entry. And then we have really nice resistance up here in a thin zone between. So if and when it took out that 660 level, it's probably going up to around 775, 770 over time. But once again, still some work to be done on these. Okay, and I'll wrap it up with this one, WMLP. This is a small coal company, and just this speaks to the volatility in these stocks. Here's a chart that we're still looking at daily time frames here. And here's a stock that just in, 3 days, this week alone, has climbed, if I can nail that low. No, I'm not even at the low. I'm at the midpoint of that candlestick. But that stock ran right up to resistance and gained 71% this week. And that is really in 3 trading sessions, it gained over 70%. And you can see it did even more than that right here. There's a run that looked like not even a week's worth of candlesticks, and that went up 133%. Again, it goes back to low price. I'm going down this list in descending order. So this is about a $16 million market cap. Trade these, you better use wide stops, but the potential's there. If you see the nice divergent low the stock put in, and this is where the traders stepped in. They bought that divergent low. It coincided with a rise in crude prices, ran up to that level. It's pulling back today. If and when it breaks out, there's resistance up here around 512, and ultimately, if the sector can gain some traction, this is a very solid resistance level and target around $6 a share. So as much as it's come up, there's still a lot of potential. And again, if you scale these things, you look at the big picture. You might say, well, I'm trying to pick up nickels in front of a steamroller. You're not. I mean, these stocks most of them are priced for death, meaning bankruptcy. And there will be, and there have been some that have filed Chapter 11. For those that don't, here's a stock that's dropped 99%. It's come down from a high of what is that, about almost $300 down to under $3 a share. So kind of put things in perspective, that for those that do survive, like any industry, any sector, you wash out the competitions and the competition in a bear market like this. So a lot of companies have gone to the wayside, and those that emerge will emerge stronger. And I know that coal is really a dying sector, at least in the U.S. It's a dying industry. But again, as we just looked at that chart, some of these stocks being down almost 100%, many being wiped out. The question is, how much of that has been priced into it? Coal's not going to go away completely, at least not overnight and not in the next year or so. So, all right, this has been Randy Finney with the right side of the chart. And as I mentioned, as any of these look poised to pop, I will share them in the trading room, and or possibly as a couple of them as official trade ideas on the front end of the site. But I did want to share this for those of you looking for any long setups at this time.